Let's get a check of the day's business news now. Joining us live is Peter Switzer, the founder of the Switzer Report. Pete, stocks down since September. Is a turnaround on the cards this week?
Well, this week is going to be interesting, Pete, because a lot of economic data will determine the enthusiasm for stocks. At the moment, look, September is the scariest month of all, and it's basically following the script. I think the data that we get both in the US and here will be very important for what happens to stock prices. Personally, I'm looking at buying opportunities because I think the December quarter will be good for stocks, but at the moment, there's a bit of hesitation, and economic data is going to be critical.
Okay, what are the buying opportunities, Pete?
Okay, well, I'll get to that.
Okay, so what are the big market drivers?
We'll get to that in a minute.
Is this my next question? The big market drivers this week? Is this the answer to that question?
In a sense, it is. Yeah, because on Wednesday the Yanks get US CPI, right? Inflation number. It's really important. Thursday they get retail. Put all that together. If it's subdued, the market will like it. And if it's too enthusiastic, too high, then the market won't like it. Locally, we've got business confidence and consumer confidence, and then later in the week we get unemployment. And in a sense, we need to see unemployment rising to show that the Reserve Bank's interest rate rises are actually working to slow the economy down and beat inflation. Now, to get to the more important question you just asked a moment ago, purely for your own self-interest,
yeah, of course.
What are the buying opportunities? The question is, do you go before the US CPI on Wednesday in the US, which would be Thursday here, or do you wait to see the numbers and buy after it? The cautious investor will wait till the middle of the week and see what US CPI. The person who's a long-term investor might think, well, maybe I'll buy today or tomorrow on the basis that I'm investing for 12 months' time. And what I'm looking at personally, there are a number of products in the market that are quite interesting. One is called Gear from Beta Shares, and basically it magnifies what you buy. So it basically captures the overall stock market. So if the market goes up 10%, you might get 18 or 19% gain. Of course, the flip side is the market falls. You lose by the same magnitude. But if you're taking a 12-month view, pretty good. And there's no margin call, which I think is pretty important as well.
When you say Gear, G-E-A-R, is that what that is?
That's the actual ticker code. Beta shares are actually very interesting, the sort of names they come up with. They've got Robo for a robotic one and all those interesting names. But the one thing I like about this is that there's no margin call. So if you get it wrong and you're prepared to wait, eventually the market should rise. Okay, yeah.
All right, I like it. Peter Switzer, the founder of the Switzer Report. Appreciate your time as always.